Hey everybody, it's Eric. In this video, I want to show you what I think is the easiest way to day trade SPX options. And the way we're going to go about this is to think about, well, where do we think the market is not going to go? Instead of being a straight directional trader, there's a lot of money to be made selling options, and we like to use credit spreads because you can define your risk, and you really just need a little bit of an edge to find out where you think the market isn't going to go and sell your spread in that direction, or at least in that area. So to help me with this, I developed a tool over at Alpha Crunching that gives you a directional bias. Not all days have a directional bias, but I want to show you an example of a recent trade I took. This was actually yesterday for Thursday, August 17th, 2023. Before the trading week begins, this tool is going to tell us what days could be bearish, bullish, or maybe even neutral. So when we think about selling credit spreads or day trading SPX options, we want to think about, do we want to go delta neutral? Do we want to go directional? On this particular day for this Thursday, we can look at the forecast and say, okay, before the trading day begins, there's definitely kind of a bearish bias that's been happening over the last several weeks. So I'm going to go into the day thinking that I'm probably going to want to sell a call credit spread at some point, maybe in the morning. At this point, I'll look to my analysis to potentially find a good entry. So here's what the chart looked like that day. The market did gap up just a little bit. And I like to use kind of a trend indicator. There's different ones you can use. You can just use Heiken-Ashi candles. Those actually work pretty well too. I've been using this indicator called UT Bot Alerts. One of the members in our group turned me on to it. It's just super simple. And when the market opened up, it was obviously got a buy signal because it gapped up. But as we pulled back on this particular candle, and here's where I maybe didn't do the right thing. On this particular candle, we started to get a sell signal. Remember, I'm looking for a short entry, and I went ahead and sold an out of the money 45.25, 45.30 call credit spread. And then here's where that level is, 45.25, when the market was right here, about 44.08. So let's call it 20, 25 points or so out of the money. However, the sell signal disappeared because I didn't wait for the candle to close. So I kind of jumped the gun a little bit on this one, and that's okay. It doesn't have to be exact. We still have that bearish bias. We still have 20 points or so of room. So I sold that credit spread, and then about an hour later, as the market continued to dip lower, when I sold it for $1.20, I was able to buy it back for 60 cents or $60. So I was able to book 50% of that max gain, which was $1.20. I was able to book 50% of that gain in about an hour. So when you I did 5 contracts here, so that's about $300 in that hour. Later in the day, there was another really good sell signal that really took the end of day dump. Admittedly, I didn't take that trade. I made this, I was out, easy. I don't like sitting in front of the computer all day, but I thought I'd share how I traded in the morning and how I use the forecast. If you want to sit in front of the computer all day and you want to look for every entry, you can easily set up alerts for various things like that. But I think this is one of the easier ways, again, to find a bias for the day, whether it's up, down, or sideways, and then craft a trade around that type of strategy. If it's bullish, you might want to sell a put credit spread, defined risk. If it's bearish, like in this particular instance, we had a bearish forecast, so I stuck to the call side. And then some days are actually sideways, and you can just maybe sell both an iron condor. So I hope that helps, and we'll see you in the next video.